Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the running return on investment. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Remember, if you want to know how I'm navigating these markets, check out the sale on the premium list. You can find a link to that in the description below as well, and lock in the lower rate. Let's go ahead and jump in. So this is a chart we've shown many times on the channel, and I like to do an update on it about every 2 months or so. So this is the running 1-year ROI of Bitcoin. And one of the things I talk about quite frequently with Bitcoin is the idea of diminishing returns. Now, one issue with one way of showing diminishing returns is that choosing the starting point is somewhat arbitrary. So it depends on whether you choose the market cycle bottom, the halving from the prior all-time high, and while all three of those ways show diminishing returns, there are still some people that are holding out hope that it does not play out. Now, I will say I will be happy if it does not play out, but yet again we have another chart that shows evidence that in terms of the 1-year ROI, the 2-year ROI, etc., diminishing returns are a thing. And the beauty of this type of analysis is that it's not arbitrary in any way. I'm not saying we're going to measure it from one very specific point. We're just looking at a window of the 1-year, 2-year, 3-year, and 4-year return on investment of the price of Bitcoin. So this is the first chart. This shows the 1-year ROI, and note that it is on a logarithmic scale. So you should remember that the distance between orders of magnitude on a logarithmic scale is the same, while the minor ticks are obviously spaced in a different way. But this is a logarithmic scale. So remember, 10 to the 0 is 1. Okay, so 10 to the 0 is 1, 10 to the 1 is 10, 100, 1,000. Okay, and then 10 to the minus 1 would be 0.1, meaning that would be a 90% drop from a break-even point of 10 to the 0, which again is 1. What you notice with the 1-year ROI is that even if you look at it like a running window, it appears that Bitcoin is unable to put in a higher 1-year ROI every time we make a major move. Okay, and that also goes in line with the idea that we will see diminishing returns as we continue navigating the market cycles. Now, one of the interesting things, this line is, again, it's somewhat a little fluffy, right? We don't know exactly how to draw it. Obviously, if we hit this trend line, if we drew the trend line so it connected this point, and this point, then this one would have gone above that trend line. So again, this is just, at the end of the day, it's a trend line. It can easily be broken. I'm not using it to say that we can't go past it, of course. I'm not saying that. I'm just saying that it can be as a guide. It can be as a guide. And so you can see that in the past, we've seen the 1-year ROI go as high as almost 200x. In 2017, we saw it go over, this is 10x to 20, it's about 25x or so within 1 year. And most recently, we saw it go just over 10x. Now note, remember that the distance between this one here and then this line this is 10x, and then this would be 20x up here. So you can see that in fact we were unable to go to a higher 1-year ROI than we saw a few years before. Now, one of the things about this chart is remember that the price can go sideways and we could still go down depending on what the price was doing 1 year ago. Now imagine the price of Bitcoin goes sideways for a year. Okay, let's just imagine that it does. It probably won't. I can almost assure you that it won't. But let's suppose that it did. Let's for a minute suppose that Bitcoin's price went sideways for a year. If we're taking the 1-year ROI from a running window, we know that last year, from this point, the price of Bitcoin was basically just going up for another year. So if the price now were to stay constant for a year, which again it probably won't, then this would actually come back down. Because imagine a year from now, which I'm not saying that it will be, but imagine a year from now the price of Bitcoin were 40K, then the ROI would be 1 because you're buying it at 40. If you're buying it at 40K today, and then in 1 year it's also at 40K, then the ROI here would come back down to 10 to the 0, which would be a return on investment of 1. So that's the first thing to note. So note that it's going to be fairly difficult for Bitcoin to immediately put in higher numbers here because it's fighting against an increasing Bitcoin price from a year ago. One of the reasons it went up so quickly was because we had the pandemic dump, and also the price of Bitcoin was going up relatively quickly. So not only was the price going up quickly, but the reference point was going down quickly. Therefore, you had a spike in the 1-year ROI that took us all the way over 10x, okay? Now, one way we could speculate that it plays out from here, obviously we got to consider the fact that it could come down for a while, and even if it did, I don't think that's the worst thing in the world, especially in line with the idea that things can take longer and with the idea that we will get diminishing returns. But imagine it came down for a little bit, maybe didn't go all the way to 1, but let's say it put in a 1-year ROI of 2 by the end of the year. So let's suppose by the end of the year, it goes down to 2 or 3 maybe. I mean, and remember the price of Bitcoin at the beginning of the year was around, I think it was around 28K. So if it did a 2x, then by the end of the year that would imply a 56K Bitcoin. If it's 3x by the end of the year, then we're getting closer to the 80K range, 80 to 90K range, which would be a pretty lofty target. But of course, Bitcoin could theoretically make it. Now, so imagine the ROI goes down for a little while with the price of Bitcoin staying constant and the reference point changing. So imagine the reference point changes for the next year or so, and it's going up every single day. So from this point, we could say, well, maybe it'll look something like that, and therefore, the return on investment could still theoretically go up to these higher numbers, maybe a 6x or a 7x, something like that. But what could make it go to that level? So what could make it go to 5x? What can make it go to 5x? Well, imagine if Bitcoin just hit 30K, right? We know that Bitcoin just hit 30K just a day ago, basically. If in a year the price of Bitcoin is 150K, then you're looking at a 5x. Okay, so that's one way to try to better understand this chart. We can also look at the 2-year ROI and note that it actually follows the 1-year ROI fairly closely. And this is why we always say that it really is about, getting in during these lulls in the market and then riding the next wave up. But you can also see diminishing returns even if you look at the 2-year ROI, even if you look at the 2-year. One thing you can look at is the 2013 move was a double peak cycle, and actually the 2-year ROI was slightly higher than the first intermediate peak. The same thing goes for the 2013 one. So we could still theoretically go higher than this one and be still lower than this one, and it still maintain the diminishing return idea. This is the 3-year ROI. You can see that we go down significantly, and then the moves back up are still somewhat diminishing, and this one was still fairly low. And then you look at the 4-year ROI, and that's what it looks like. And I think it's worth honing in on the 4-year ROI a little bit more, because one of the interesting things is it hardly ever goes below 10x. Now, I do not think that Bitcoin will hold this forever. Obviously, if Bitcoin is always putting in at least a 10x every 4 years, then eventually the price of Bitcoin is just going to be worth more than all the money on the entire planet. So obviously that's not something that's going to continue to hold forever. But you can note that those that just sort of stick around in Bitcoin for a few years tend to be doing very, 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 very well. And you can see that it is coming down relatively quickly right now. Well, why is that? Why is the ROI, the 4-year ROI, coming down relatively quickly? Well, if we look at this chart, we can note that 4 years ago, so on May 24th of 2017, so if we go to May 24th of 2017, the price of Bitcoin was moving up relatively quickly. So it was moving up quickly here, but right now we're going down. Therefore, the 4-year ROI is going down fairly quickly. And note that if Bitcoin does not continue to make a major move to the upside very, very quickly, then the 10-year ROI is going to be hard for it to not go below 10, because in order for it to do that, Bitcoin needs to go to a $200,000 Bitcoin by the end of the year. So if Bitcoin goes to a $200,000 Bitcoin by the end of the year, then we would be looking at a 10x ROI as measured from the peak to the next peak, which I do think is a somewhat lofty goal, but of course we'll see if it's possible. Hopefully this information was informative in terms of understanding the yearly ROI, the 2-year, the 3-year, and the 4-year running ROI of the price of Bitcoin, in terms of understanding where we could be, what are limitations to the upside within 1 year, and recognizing that despite even if you get rid of an arbitrary reference point based on what someone's interpretation of a market cycle is, even if you just look at the 1-year ROI or the 2-year, etc., you can see that the returns do not quite keep up with prior moves. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Remember to check out the sale on the premium list. You can lock in the low rate. Find the link to that in the description below as well. Thank you guys for tuning in. Subscribe, and I'll see you next time. Bye.